Yesterday, silver didn't just rise, it shocked the world. Prices blasted through historic levels, smashing records that stood for decades. Investors everywhere watched in disbelief as silver surged into uncharted territory, signaling that something big was unfolding beneath the surface of global markets. But silver flew too close to the sun. When prices rise this fast, markets don't celebrate, they react. What felt like unstoppable momentum suddenly became dangerous altitude, and gravity was about to remind everyone who really controls the game. Within hours, the mood shifted. Silver prices snapped lower, volatility exploded, and confidence cracked. This wasn't a normal pullback, it was violent, emotional, and fast, catching over-leveraged traders completely off guard. Then came the real reason behind the chaos. COMEX stepped in. When the largest futures exchange in the world makes a move, markets listen, because history shows this is how rallies get slowed down. COMEX officially raised margin requirements on silver futures by 10%. That single decision instantly changed the rules of the game, making it far more expensive to hold or enter silver positions overnight. Silver prices started whipping violently in both directions. Up one moment, down the next. This kind of movement doesn't reflect fundamentals, it reflects pressure, fear, and forced reactions happening behind the scenes. Across trading floors, panic set in. Red numbers flashed. Positions shrank. Traders realized leverage had turned from a weapon into a liability, and exits suddenly became crowded. Just hours earlier, silver touched nearly $65 an ounce. A level few believed possible. That moment alone reshaped expectations and reminded markets how explosive silver can be when momentum ignites. For many traders, margin calls were inevitable. With higher requirements, more capital was demanded immediately, or positions would be liquidated. This is how selling accelerates, even when long-term demand remains strong. Some didn't have a choice. Contracts were closed. Silver was sold, not because belief disappeared, but because rules forced hands. That's the hidden engine behind sudden drops like this. Margin hikes aren't the only defense. Circuit breakers now stand ready. If silver moves too fast, trading can be paused instantly, freezing momentum right when it matters most. In today's markets, speed is controlled. When volatility spikes, time itself is slowed. These pauses don't stop trends forever, but they disrupt emotion, rhythm, and momentum. Behind the scenes, massive institutions remain calm. They're built for this environment. While retail traders react, large players adjust, quietly benefiting from volatility they helped create. At its peak, silver briefly became one of the top 5 assets on Earth by market value. Bigger than Amazon. Bigger than Bitcoin. That moment alone speaks volumes about silver's underestimated power. For a short time, silver's market cap doubled Bitcoin's. Digital hype faded, while physical reality took center stage. Hard assets reminded the world why they've survived every financial era. Even after the pullback, silver remains up over 115% this year. That's not weakness, that's strength. Corrections don't erase trends, they test conviction. Now the big number is circulating, $100 an ounce. Will it happen? No one knows. But once narratives shift, markets rarely return to their old comfort zones. History reminds us that silver rallies can be legendary and brutal. Massive gains are often followed by sharp drops, shaking out weak hands before the next leg higher begins. For long-term holders, moments like this aren't fear, they're opportunity. Pullbacks create entry points, not endings. Patience often wins where emotion fails. Despite everything, silver is still standing strong above key levels. The trend hasn't broken, it's been challenged. And markets often reveal their true strength under pressure. So the real question isn't whether silver fell today. It's how long control mechanisms can contain something driven by real demand, tightening supply, and global uncertainty. Silver didn't lose today. It sent a message. This market isn't finished, it's waking up. And the next move may surprise far more people than the last one.